I've seen Tesla as egregiously overvalued for about the last year and a half. Its valuation, I believe, is driven by hype. Twitter is a hype machine. Musk is very clearly stepping away from Tesla to Twitter. He's got a lot of things to fix over at Twitter, and that is pulling the hype off Tesla. The idea that maybe he's named Tom Zhu as the successor, I don't know when he's going to take the reins, is also a fairly big negative for Tesla. So, he's a very talented executive. Tesla's a very important company. It's transformed transportation for the world. But we think people should ask, really, what do we want to pay for this, and what's it going to look like in 5 years?
Craig, what do you think fair value is for this company right now?
Shouldn't be worth more than Toyota. So I think something well below 100. My price target's 85.
Has Tesla now fallen by enough to make it attractive?
Yes, I think it has. It's not investment advice. It is just my view that this is an opportunity, I think, for the long haul.
In this extremely controversial video, a dangerously logical Tesla bull shares some facts about Tesla, ignoring the noise that doesn't have anything to do with Tesla, exercising dangerous amounts of reason and logic in a time where we should be worried and concerned and emoting rather than thinking and reasoning. This man is very dangerous indeed. And we also have the laughing stock of Wall Street, Craig Irwin, claiming that Tesla should be worth no more than Toyota. I'll explain the absurdity of that statement and many of his other idiotic points further in this video. It's always good to hear from both sides, Tesla bull and a Tesla bear. At least, closeted Tesla bull who claims to be a Tesla bear. It's the only possible explanation I can have for why Craig Irwin says what he says. By the way, guys, a heads up, I posted a 15+ minute video today on Patreon, an exclusive video that is far too spicy for YouTube. Not a pleasant topic, but one that absolutely needs to be discussed. If you remember, you already know where to find it, and if not, you can join with your card in the corner or the link at the pinned comment. But fair warning, it ain't fun, and it is definitely way too spicy to be posting here on YouTube.
Now, Tesla is hitting the brakes as of late. Shares falling this morning on reports its Shanghai plant would cut shifts and delay hiring as well. The stock recently clawing back some losses, but over the last 3 months, it's down 40%. For more, let's bring in Loop Ventures' Gene Munster, a man we'd often turn to for talk on Tesla. I think maybe, Gene, we'll start off with a broader question. Has Tesla now fallen by enough to make it attractive?
Yes, I think it has. It's not investment advice. It is just my view that this is an opportunity, I think, for the long haul.
I also, not giving investment advice, happen to agree with Gene Munster. Tesla stock has fallen enough that it's more than attractive. Let's just leave it at that. Isn't it a shame the same can't be said of your girlfriend? If she were to fall far enough, she too would become attractive? I'm just kidding. I know you don't have a girlfriend.
And Dom, I would kind of paint this, frame the picture of what's happened here is it's been a vortex around reports today from Bloomberg about production cuts in China, about how much Elon's time is being spent with Twitter, and that's being a distraction. And I think what is being, missed here is what some of the facts are.
Can you believe this guy saying something so controversial and brave that people are ignoring the facts at this point in time, getting distracted by the noise, the stuff that isn't actually relevant or related to Tesla's execution? I can't believe the gall of this guy.
And this comes to the opportunity here, and I'll start with some of the near term. And I'm reluctant to use the word facts because many that is often disputed, but we do know that Tesla is discounting in China and they're discounting in the U.S. And in China, Tesla's deliveries for the month of October, they report this, the China Passenger Car Association reports these numbers. These are hard numbers, was up 32%. It was up 90%, the numbers that came out today. People looked past it because of the other broader headlines with the Bloomberg story. But
this is disgraceful. How dare he point out that Tesla China deliveries are up 90% year over year? That's not what I heard in the mainstream finance media. This dickhead and his facts.
That compares to the broader numbers in China being down 6% for the month of November. So China, Tesla's gaining share. So Dom, I think these concerns that we've seen more recently, I think are largely overblown. I actually think that the delivery numbers are going to be okay. And longer term, I think Tesla sets up in a good position relative to other car makers.
Gene, when you say over the long term, that there's a certain amount of patience some investors will have for this to play out, and I would say that it doesn't seem that there's been as much rumbling from the Tesla shareholder base because of the halving of market value over the course of 2022. How much time do you think investors will give them for this thesis of market superiority to play out?
Well, you probably lose a quarter of them if they don't deliver on what will be the expectations for the December quarter, because, of course, they had a slight miss in September, and they talked about some logistics that have pushed those deliveries into December. So it's a little bit of a show-me story. So to answer your question is that if I'm wrong and deliveries do show some softness, I think that you're going to see an exodus from at least part of this base. I think you will see people continue to believe in this for the long term, because there's other forces in play, like what's going on with China and production. But this would be a pretty big negative if they ended up missing. I don't think it's going to happen. And maybe said a different way is, what is it going to take to regain some confidence? I think a December delivery number that shows the total deliveries for the year are 1.4 million or greater. That's the bogey. I think will relieve people considerably and get, I think, would be a positive catalyst for the stock.
So, Gene, you're talking about fundamentals for the company of Tesla. The stock has obviously been very weak, down 20% or so over the last, month and change. And, it's really, underperforming many of its auto peers here. But there's something else going on, right? And so is it also, is this shareholders voting on the job that they think Elon Musk is doing? Because he's been very preoccupied with the situation with Twitter. And, the story that I thought was just as important as the production issue in China is that the bankers that gave him the $13 billion nearly in debt to buy Twitter are suggesting that maybe they're going to kind of reformulate that with some margin loans against his Tesla stock. And I really feel like, again, if he were to miss Q4, the fundamentals get worse. If there's a global recession here and the stock continues to go lower and he's pledged over 100 million of his shares, doesn't that create a really difficult scenario if there are margin calls for Tesla shareholders?
Absolutely. The ledger you just printed out or listed out there, that's on the negative side. And I would kind of come back to, if the numbers are good, if the delivery numbers are good.
So Dan, the man over here, actually I should never call that guy a man, he's a fucking baby. Dan, the baby here, regurgitating some of the FUD in the media regarding margin and potentially pledging more Tesla stock. Clearly, no one having this conversation has done the fucking math. There's nothing there. Even in the worst case scenario, if there's a little bit more Tesla stock that needs to be sold, as a percent of Elon's overall holdings of the company, it's nothing. Wouldn't even move Tesla stock on that. But of course, it sounds bad. Gene, however, with his dangerous amounts of reason and logic, once again directs the conversation back to the actual numbers, things that relate to Tesla, the company and their execution.
For the December quarter, everything that we just talked about there probably doesn't matter as much. And I think it really comes down to that. It's the view that Elon is being distracted. These production numbers, I don't know if they've been cut. Tesla says that they refer to it as fake news today. Who knows? But to answer your question is that ultimately all that is anticipation. The substance of this all comes down to, are they going to deliver the cars? And if they do that, the stock goes up. If they don't, it goes down.
Hey, Gene, it's Tim. I've always been frustrated by everyone looking way far out, and in terms of Tesla and trying to impute a valuation based upon growth that will be there.
For those unaware, just a quick history lesson. Tim Tam over here has been famously, embarrassingly, and painfully short Tesla stock in the past, to the point where well, I mean, you can be whatever you want, so maybe I shouldn't assume. Maybe Tim is a she. She, he, them, they, whatever. Tim Tam over here was called out live on air by co-host Melissa Lee, who just wanted to see how much pain he was still enduring being an absolute moron buying into the Tesla Q fight, by asking out loud, publicly, on CNBC after Tesla had torn, it was up like 800+% in the span of a few months, regarding Tesla. Melissa Lee, her best line of all time. Hey Tim, you still short? Of course. Tim then, processing the emotional trauma, the colossal amounts of money lost. Sorry, I couldn't hear you. Hi, I think you were talking to me. Hi, and just completely ignored the question. It was the most hilarious shit I've ever seen live on CNBC, ever. Classic moment. Now, we heard Tim Tam there. I forget his last name. Oh no, Seymour. Sealess. Tim Sealess. That's right, Tim Sealess. No, Seymour. I'm really bad with names. Sorry, guys. So anyway, this guy, or girl, or whatever, we've been over that. This entity has been delusionally anti-Tesla for years. Suddenly starting to come around a little bit. But did you hear what he said there? Let's replay this. This speaks perfectly to the brain-dead short-term trading mentality of the idiots on CNBC, with very few exceptions, versus investing. Let me play this exact clip. Sums it up perfectly. I don't even need to comment any further. Just pay attention to the words he says.
I've always been frustrated by everyone looking way far out, and in terms of Tesla.
I've always been frustrated, an emotional word, about people looking far out, as in long-term Tesla investors. I've always been having a negative emotional reaction to long-term Tesla investors looking far out into the future instead of as far out into the future as my micropenis extends. He literally uses an emotive term, frustrated by people looking out into the long-term future. You know, those same people that instead of being short Tesla back in 2018, 2019, he's been frustrated by these people looking out far enough into the future that they could see beyond the FUD over the next couple of seconds that Tesla was apparently going bankrupt. The same clown who was short Tesla stock somewhere around 2018, 2019, before getting absolutely destroyed, I think still short in 2020 as well, was frustrated by those very people who had a long enough perspective to see that shorting Tesla stock was an idiotic idea at the time, and the stock was a bargain of the century. Is it possible that some of Tim's investing decisions are actually emotional decisions? Just putting that out there.
I've always been frustrated by everyone looking way far out, and in terms of Tesla and trying to impute a valuation based upon growth that will be there. I'm not being critical of you on that. I would like, though, for you to focus on the current macro around the auto sector. I'm actually not that worried about China production at all. In fact, I think some of the issues in China, if you look at the SARS numbers, they've come in dramatically. Auto demand is just coming down globally. I worry about the cyclicality of a car company. I think it's a car company. Talk about that.
Well,
Whoa. Is that a first? I'm pretty sure, maybe it was just some weird breathing sounds, but I'm pretty sure Gene Munster just breathed a sigh of frustration at Tim's question. Now, this is a very composed man. Never shows any emotion. Calm. Balanced. Zero passion. Just the facts. The antithesis of me, probably. I'm pretty sure that Munster just sigh of frustration. Let's have a listen. Is it just me? Am I imagining things? I'm not that high, am I?
Well, I see it different. I think that replacing a gas for an electric motor is I think it does change the equation. And I think what Tesla has shown is that by bringing together hardware and software, it does create more value. And that's why I think that they've done well in the car market and the EV market. So I think the margins that they've delivered have been more tech-like. They're not true tech, but they're better than traditional car companies, and I think that would be some evidence that it's more than just a car company. And I agree with you. I've been guilty of looking out 5 years and talking about where Tesla is 5 years. And just, if I may, I think in 2 years it will prove to be some upside here.
So there you go, Gene Munster with a very short-term perspective, just to appease CNBS here. By short-term we mean 2 years, which in their world is centuries, but it's about as short-term as Munster's willing to go, suggesting at best the pain in Tesla stock is probably going to be limited to the next 2 years at most. I tend to agree.
All right, Gene Munster on the Tesla trade. Thanks very much. We appreciate it. Guy Adami, yes, I'll throw it to you. I mean, you heard the questions, you heard the commentary. Is Tesla a stock that you want to own right now?
No, I don't think so. It's not trading well. I mean, it's actually technically doing everything you want to see it do if you're bearish or short the name. I mean, the move down to 167, the subsequent move basically up to 200, failed there, making another run at the lows. Support in this stock is somewhere between 145 and 150. And if the tape rolls over, like I think it may from these levels, I think that's where Tesla is going.
That's right. The genie says on CNBS, this is how you reason around a stock and whether or not it makes sense to invest. Has the stock been going down recently? It has? That means it's going to continue going down. Therefore, you shouldn't own the stock. That's all the thinking I need to do. Because stocks go down, don't buy the stock, sell the stock. Stocks go up, buy the stock because it's going up. I mean, that's all you need to know. That's how to invest. I mean, right?
No, I've seen Tesla as egregiously overvalued for about the last year and a half. And, its valuation, I believe, is driven by hype. Twitter is a hype machine. Musk is very clearly stepping away from Tesla to Twitter. He's got a lot of things to fix over at Twitter, and that is pulling the hype off Tesla. The idea that maybe he's named Tom Zhu as the successor, I don't know when he's going to take the reins, is also a fairly big negative for Tesla. So, he's a very talented executive. Tesla's a very important company. It's transformed transportation for the world. But we think people should ask, really, what do we want to pay for this and what's it going to look like in 5 years?
Craig, what do you think fair value is for this company right now?
Shouldn't be worth more than Toyota. So I think something well below 100, my price target's 85.
So let's talk about why Craig Irwin is an idiot. Sorry, let me clarify. One of the reasons why Craig Irwin is an idiot, quote, Tesla's success stems largely from the profitability of each of its cars. The Toyota Group sold about 2.62 million vehicles in the quarter, most recent quarter, 7.6 times as many as Tesla's 344,000. But its net profit per vehicle came to around $1,200, just 1/8 of Tesla's $9,570 per vehicle sold. Let's use our brains here, something Craig clearly has not done. Seriously, do some math. Tesla making 8 times as much money per vehicle sold in the most recent quarter. 8 times as much money as Toyota. Toyota selling less than 8 times as many vehicles as Tesla. Let me explain just in case your brain's not really working too well. Maybe you haven't had your coffee today. Tesla is already making more profit selling vehicles, total profit, than Toyota is, despite Toyota selling nearly 8 times as many vehicles. If we literally ignore everything else and just all of it, put it to the side, Tesla's making more total profit selling vehicles today than Toyota. That alone, if there was literally nothing else at all that was relevant, that alone would justify Tesla being worth as much as Toyota, actually a little bit more. But then you've got to think about how the stonk market values stonks. The stonk market would prefer that you have higher profit margins rather than razor-thin profit margins and selling high volume vehicles. Therefore, the stock market should be valuing Tesla high. And then there's the whole, I don't know, it doesn't really matter that much, growing 50% per year consistently. That would be Tesla versus Toyota in decline, meaning Toyota should have a much lower multiple and Tesla a much higher multiple. And this, of course, is ignoring everything else that also matters. You know, like Tesla's insane scale, their profitability, their wait times, their technology, their software capabilities. I just go on and on and on and on. It's also ignoring full self-driving, their AI, like all of that stuff. Put that all to the side and we just look at the numbers and the rates of growth and the profitability alone. Tesla is easily worth many times more than what Toyota's current market cap is, just based on vehicles alone, ignoring everything else. Now, there's no way on earth Craig Owen genuinely believes what he says. He's either a moron, and I don't think he's that dumb, although he's pretty dumb, or he has a humiliation fetish. I wouldn't be surprised if it turns out in the future that Craig Owen actually does have humiliation fetish. This is the most logical explanation. Or alternatively, maybe he has some incentives to say things that make absolutely no sense about Tesla. I wouldn't want to speculate as to what those reasons may be, but they're about the only 3 possibilities I can come up with as to why Craig Owen would say something so absolutely fucking absurd as Toyota, who still don't have any viable EV plans and will be bankrupt before the end of the decade, who are in decline, who aren't even growing, who aren't even making as much profit as Tesla, selling vehicles despite selling nearly 8 times as many. There's just no reasonable, logical explanation for why Craig says what he says. I need to call out this bullshit because it's absurd. It's absolutely absurd to make this statement.
Your price target is $85. We're at $176 today. How much of that relates to his involvement in SpaceX and Twitter and other things? How much of that is just what you think this business unto itself is worth? If there was no Twitter and no SpaceX, would you say the same thing or no?
I would say the same. I would say exactly the same thing. I think, I've been saying that actually for a while. I'm pretty stubborn. I stick with my thesis for a long time unless I get pushed off it pretty hard.
Stubborn is certainly one way to describe being completely dead fucking wrong for the last decade straight about this company. Actually, in fairness, early days, Craig actually was quite the Tesla bull. Then suddenly, inexplicably, out of absolutely nowhere, he completely 180'd, which obviously had nothing at all to do with anyone knocking on his door with a large pile of cash. I don't even know why I said that out loud because that would never happen. I'm just saying that previously he was actually very bullish on Tesla in the early days. We're talking like 10 years ago, give or take. Then inexplicably, a few years later, completely turns and has stubbornly remained very bearish on the company since. Of course, he says one thing and does another, praises Tesla constantly and then the leadership, but then he gives these hypothetical scenarios. The competition's finally coming, blah, 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 blah. It never comes. There's better opportunities in the market. And then he has absurd price targets while simultaneously not advising to actually take action based on the price targets. E.g., if his price target's 1/4 of Tesla's stock price, he doesn't recommend investors sell because he doesn't have enough confidence in his stubborn clinging to his bearish thesis. He doesn't actually want people to follow his advice. So he says Tesla's worth 1/4 of what it is today, but don't sell the stock if you own it today because I don't actually believe what I'm saying. Stubborn or stupid? You decide.
I don't believe Tesla's worth more than a company like Toyota. Sells, almost an order of magnitude more vehicles than they do.
Yet, as we just discussed, they're making less total money, not money per vehicle, total money than Tesla, who are selling about 1/8 as many vehicles. If we understand anything about investing and valuations here, the stock market will award a much higher overall market cap valuation to a company that's making more money per similar product sold, irrespective of the growth. I mean, again, Craig cannot possibly believe what he's saying makes any logical sense.
There's nothing.
And you don't buy the argument that Tesla ultimately could turn out to be way more than a classic automobile company, insofar as it could turn into a robotaxi business, given the self-driving features that they're creating. It could turn into a solar business. It could. The thesis around the stock price being as high as it is today. Ron Barron's been on our broadcast and others, would be that it really can't be considered an automobile company unto itself.
I think those are false arguments. So the self-driving capability is something that consumes power. If you're going to have level 4 with technology that's on the drawing board today, you're going to consume just as much power for the actual ADAS system itself as you would for the drivetrain. Think about cutting the miles you can drive in half. That's actually also fairly expensive to operate, and the technology is not there. It's not safe enough. They're having serious problems with optical apparitions causing fatal accidents. I don't see robotaxis anytime soon. There's a lot of other things people like to point to, software, etc. I don't think Toyota can't do that. There's no reason Porsche or Daimler or someone else can't do that.
So Craig Owen there claiming there's no reason that a company like Toyota or Porsche can't nail software like Tesla. If this is true, I don't believe it is, but if this is true, why then, given the fact that they need to nail software and many other things, otherwise they're going bankrupt, why then would they not have already done that? This is an existential threat here. If it's not that difficult to nail software just like Tesla, then why has Toyota and Porsche failed to do so thus far? It's a good question, isn't it? One that Craig does not have an answer for. At least not one that is logical, reasonable, or rational. This guy is just such a mixed bag. I still don't really understand why he says what he says, but I don't believe he says what he says because he believes what he says actually makes sense. Let's just leave it there. Quite the mixed bag in today's video. Tesla bull, seemingly very frustrated by some of the brain-dead clowns on CNBS. Speaking of the brain-dead clowns on CNBS, Tesla stock's been going lower, therefore it's going lower, therefore don't own Tesla stock. I mean, hey, that's all the thinking I need to do. BRB just gonna sell all my Tesla stock and, I don't know, go all in on whatever the CNBS panel tell me to buy instead. Seems like a good idea, right? Gene Munster there, multiple times attempting to bring the conversation back to facts, data, numbers, and a long-term perspective. Tim Tam outing himself as an emotional investor, frustrated by investors that have a long-term perspective. What the fuck does that even, How does that even compute? Why would you, what? I don't understand. Actually, I do understand. He's butthurt that he missed out on the Tesla gains. He's butthurt he was wrong. He doesn't want to admit he was wrong. He just keeps doubling down. How dare these motherfuckers think out far enough into the future to see things that I can't see because of my short-term perspective? How dare they? I'm frustrated. And like Gene Munster, I tend to believe that Tesla stock is fairly spring-loaded and this temporary discount definitely won't last too much longer. Although I hope it does. Still buying with every spare cent. And don't forget, epic, super spicy video, way too hot for YouTube, posted today exclusively on Patreon, over 15 minutes in length. And fair warning, as I said, not a pleasant topic, but it's very, very important and well worth watching if you can handle it. So, see you over on Patreon. Love ya.